Have you ever been in a situation where no matter how hard you work, you are still short on cash? Well, in this video, we'll go through 7 things you might trim from your budget right now to save a considerable amount of money each month and come closer to your financial objectives. Welcome to Finance Dojo. We aim to be the best personal finance educational channel you'll ever need. Click that subscribe button and the notification bell right now so you won't miss out. Number 1. Bank fees. Have you ever wondered where all these minor charges come from while looking at your bank statement? These costs are most likely convenient fees, which are similar to someone taking money from your pocket on a monthly basis. These fees are frequently associated with cash withdrawals, transfers, or currency exchanges. While a few bucks here and there may appear little, spending like $5 to $15 each month adds up over time. So in order to avoid these charges, you can actually talk to your bank representatives and request to have these fees waived as long as you provide a good reason. Number 2. Gambling. You may not have an absolute idea just how bad your odds of winning in a casino. In fact, the chances of winning the jackpot on a slot machine are 1 in 50 million. So your prospects of retiring with a large casino win were little to none. Unfortunately, many people are victims of gambling's dangers. Whether people play for the chance to win large or just to pass the time, gambling is never the player's advantage, which is why the saying goes, the house always wins. And once you realize your odds of winning and that you're losing hundreds to thousands of dollars, you'll promise yourself that you would never spend money on gambling ever again. Number 3. Interest charges on your credit card. Credit card debt in the United States has risen to over $1 trillion in 2019, up from $850 billion just 5 years ago. Aside from carrying massive sums of debt, these folks are collectively spending billions of dollars in interest each year. While credit cards may be beneficial when used correctly, many people fall into the trap of merely paying the minimum debt. Paying the minimum sum is only going to get you so far. Sure, it can save your credit score from being ruined, but each dollar of debt not paid off will be subject to interest, with the average rate being 19.24%, meaning your initial purchase has merely become more expensive. For example, if you have a $1,000 amount on your 18% APR credit card and only pay $100 minimum payment each month, it will take 11 months to pay it off, with about $100 of that being interest. To avoid paying credit card interest, just charge your card for amounts you know you can pay back. Set up automatic credit card bill payments to take this a step further, because even if you have the money on hand, failing to remember to pay your account can cause interest to build. There is still hope if you have credit card debt and are paying excessive interest rates every month. To avoid paying these excessive fees, see if you can transfer your debt to a lower interest line of credit, which will immediately reduce your loan's interest charge and allow you to focus on paying the principal amount. Number 4. Cable. When was the last time you watched a show at the time it was supposed to be shown? Paying for cable is simply not worth it for most people, making live television a thing of the past. More than 33 million Americans have terminated their cable subscriptions as of 2018, opting to spend the money on less expensive entertainment options. For example, every month, more than 150 million people watch Netflix, followed by 90 million on Amazon Prime and 55 million on Hulu. It's not only cheaper to use these streaming services, but they frequently provide better original material than most television channels, making the decision to streaming a no-brainer. But if you want to cut your entertainment bills even more, YouTube is the answer. YouTube provides an unlimited amount of high-quality material that will keep you entertained, while also helping you expand your cash account. Number 5. Exclusive gym memberships. You've probably seen it before. As the new year approaches, someone becomes ecstatic and pays up for a premium gym membership, intending to make this year they get in shape. Then, after a few months, they're back to their lazy habits and their gym membership is forgotten. According to data, over 80% of individuals who join up for a gym membership drop out within the first 5 months, and many of them are too ashamed to confess defeat, so they continue to pay for a service they will never use. The problem is caused when ambitious gym attendees treat themselves by signing up for pricey gyms in the hopes of being compelled to exercise more frequently. A gym membership is definitely not a waste for regular gym users, but even they should consider if they are paying for more than they require. Many pricey gyms nowadays try to imitate the feeling of a spa and charge you as if they were. If you want to save money while becoming or keeping in shape, assess what your genuine motive for going to the gym is and whether there are any more cost-effective alternatives. Number 6. Extended warranties. When the salesman asks one more question, would you want to acquire the extended warranty? You are seconds away from finalizing your deal. You decide to put on the extended warranty since you're a cautious person, which raises the overall cost by about 50%. Don't worry if this describes you, because you're not alone. According to a 2018 study, approximately 30% of respondents indicated they often purchase extended warranties on home devices, large appliances, and cell phones. A raise in the overall cost of 50% because of extended warranty is a total ripoff. Imagine, you're sometimes spending up to half the value of the product in the case that something goes wrong, which almost will never happen. Extended warranties aren't essential, but if you still feel the need, ask yourself first before spending the extra cash. Can I afford to replace this item if it breaks without incurring financial hardship? Is there any manufacturer's warranty included in the product? Is it worth to spend more money on a higher quality item if the cost of an extended warranty is included in the purchase? Number 7. Trying to make a good impression. People have always had an innate need to fit in, dating back to prehistoric times when tribe members were either welcomed or died if they did not. Our capacity to survive in our surroundings has improved dramatically throughout time. On the other hand, our need to be accepted hasn't changed, which has led to a culture of spending money to fit in. As the saying goes, we buy things we don't need, with money we don't have, to impress people we don't like. And for most people, this notion has always been true and will continue to be true. Spending to impress is not advised. Whether it's buying new clothes to impress someone you like or buying a new car to show off. Unfortunately, some people would buy only expensive name clothing to impress individuals. However, it's better to have wisdom, learning that people you want to be around would appreciate you for your personality, not your appearance. But apart from building more genuine connections with people, there are plenty of other advantages to avoiding this sort of excessive spending. When you don't spend to impress, you simply end up saving more, which means that instead of merely acting wealthy, you might truly become rich. Now, the next time you put anything on your shopping basket, consider if you're getting it for yourself or for someone else. So always remember these 7 things that you should never waste your money on again. Number 1, bank fees. Number 2, gambling. Number 3, interest charges on your credit card. Number 4, cable. Number 5, exclusive gym memberships. Number 6, extended warranties. And number 7, trying to make a good impression. What are some of the things you squander your hard-earned money on? Let us know in the comments section below. As always, this video is for educational purposes only and not financial advice. You should always do your own research and speak to a financial advisor before making any investment decisions. Thank you for watching and see you in the next one.